The Dow dropping almost 349 points, erasing most of yesterday's 500-point-plus rally. The S&P and the Nasdaq also having a pretty rough day. The Nasdaq falling more than 2%. Here's the market-moving comments from Tepper.
I'm leaning short on the equity markets, so right now, because I think I think the upside downside just doesn't make sense to me when I have so many people telling me, so many central banks telling me what they're going to do.
So Tepper echoing the mantra that this desk has been trying to hammer home all year long. Guy, I'm going to come to you first. Is he just preaching to the choir?
Well, I mean, we took the mantra from him in the first place. He would come on when the Fed was easing, free money, zero interest rates, and say, listen, I'm not the smartest guy. He's extraordinarily self-deprecating. He happens to be brilliant. He said, but in this environment, if you're bearish, you're fighting the Fed. So when the Fed pivoted in November of last year, we came on and said multiple times that if David is right under those circumstances, the same should be true when the Fed is taking away liquidity and raising rates, that if you're bullish in this environment, you're fighting the Fed. And he effectively said that today. The thing that really struck me, the fact that he says he's leaning short, which for him is pretty significant, is also he mentioned where trough multiples potentially could be. And he said, we've seen as low as an 11 multiple in this market. He wasn't suggesting we get there. But again, he also brought up, what do you pay for earnings in this environment? It shouldn't be as high as we are. He also brought up what is the right number in terms of earnings. He talked about 200, 210. So it was refreshing to hear somebody of his stature basically hammer home the points that we're making on the back of his stature so many times this year.
Yeah, Guy, really bright guy. I think some Carolina Panthers fans may slightly disagree, but when it comes to the markets, obviously a very brilliant guy right there. One other thing I think he hit on, he called Jay Powell a teddy bear. He called Christine Lagarde, the head of the ECB, a grizzly bear, and basically said, just listen to the Fed. They say they're going to hike rates. There's no sign of a pause or a pivot. So with that in mind, Tim, if we're going to listen to the Fed, are there some places to hide? Are there some places to put your money to work that could be safe under this environment where we're expecting those rate hikes?
Well, we're going to have a conversation about gold, and I think we've talked about staples and healthcare. But getting back to Tepper, you probably weren't born yet, Frank, but there used to be an investment firm called E.F. Hutton, and when E.F. Hutton talks, people listen. You listen to Tepper because not only does he have, you're smiling like come on.
I've seen the commercials. I've seen the commercials.
But the point here is that Tepper's been very tactical in the markets over the last 2 or 3 years at points that have been worth trading through, and at points that actually, if you think about it, he was out there in March of 21. Guy brought up a couple other points where he's been out there making points. And when you think about the Fed, in defense of the Fed, and I know that's not easy to do sometimes, until the Fed saw real inflation past their at least PCE and 2% lines, which in November of 2021 they were starting to talk about, and it's hard to believe that they didn't see it. But really, relative to their mandate, I think they've been very consistent here, and I think they're going to be very consistent on the way out, which means they may overstay their welcome.
So, Courtney, very similar question. I mean, he didn't say he's going 100% cash. He just said that he's short when it comes to equities. He also said he had a lot of questions about bonds, in all fairness, because the rate hikes would make bonds more attractive later on. Do you see any places to put your money to work today?
Absolutely. Yeah. And I do think this is something you want to look at because there are going to likely still going to be things that are doing well next year, even if we are in this higher interest rate environment. And I do think one thing that is kind of a theme recently is the fact that China is continuing to reopen. That is somewhere I'm really still looking at emerging markets because it's going to be a good thing for China as you see that consumer demand come back online. Really, that will be good for the global economy. But I do think the emerging markets actually is a place you want to still look at as an opportunity here moving forward.
Dan, Nathan, what about you? I mean, was there something in particular maybe we haven't hit on just yet from those Tepper comments? I mean, like he said, he's short on equities. He's, I guess, being patient when it comes to bonds because he's expecting those rate hikes that, in all fairness, both central bank heads said are coming. So where do you put your money at right now?
Yeah, Frank, the hard part right now is that, that GDP print that we saw this morning. I mean, we're talking about the back half of this year with average gross domestic product around 3%. We're seeing the unemployment rate that's still, below 4% at 3.7. So with all of these other inputs, industrial commodities kind of round tripping and a whole host of other things that we were worried about from an inflationary standpoint coming in, you still have a relatively strong economy. So I guess every time you get strong data like this, you have to start pricing in Fed rate hikes for longer. And I don't mean like they're going to continue to raise rates, not at the pace in which they've been doing here. But again, if the final piece of the puzzle is unemployment and it really hasn't budged much over the last few months, then, what we saw today on high valuation stocks is going to continue to happen until we see some sort of data that weakens. So we have, I guess it sounds perverse in a way, a really strong economy in the face of all these rate hikes, which really, and you think about some of the worst stocks today in the market at the lows, it tells you that there's much more to go because the multiples on these are still way too high. And if you want to push out a recession to the back half of 2023, then the first half is going to be the thing where stocks are going to have to start to discount it, and we're not there yet. Tepper used an 11 multiple. We've been trying to be fair and say maybe it never gets to a trough multiple. Maybe it's just below the 10-year average, 15. And if you get to, let's say, Mike Wilson from Morgan Stanley's $180 in earnings for next year, that still places you down just above 3,000 if I'm doing the math correctly.